What can you use EIDL loan money for? What are the EIDL terms and conditions? Are you collateralized at $25,000 or $24,000? Do you need hazard pay for EIDL loans of all values? And can you pay yourself money for EIDL loans? A lot of great, fascinating details, and we're going to screen share the entire EIDL loan contract with you in the most comprehensive video online about the terms and conditions and how you are to use EIDL funds right now. This is LALATE. Hope you are good. Thanks for tuning in. As always, like and subscribe to this video and drop your comments below, and we may feature them in tomorrow's recording. And please hit that bell on the front of this video, on the front of this channel, so you get alerts when a new video goes live on LALATE. And we'll be answering all your EIDL loan questions from yesterday in tonight's EIDL grant video. So let's jump on the computer and screen share, and let's look right at the EIDL loan contract right now. All right, so let's get right into it. We are looking at the actual Sba Loan Agreement for the EIDL loan that was provided and signed by one of the viewers of this channel. Mr. Long provided this to me several weeks ago. So what we're going to do is go through the agreement. It's a 19-page agreement, and ultimately the agreement is the terms that the parties agree upon. So who cares what SBA tells you on the phone on a Saturday afternoon? This is ultimately the agreement of the parties, and it details the terms and conditions for which you can use EIDL money. What can you use EIDL loan money for? How do you have to collateralize it, and whatnot? All right, so let's get right to it. The first part of the contract is the loan authorization and agreement. This was signed 5/13. In this case, the loan amount was for $85,000. So please understand that the agreement that I'm looking at is one over the collateral threshold of $25,000, which has been detailed extensively in this channel. I have not seen a contract where it's under $25,000, so I do not know if they have two different contracts. So I'm prefacing in that regard. But this contract says first payment terms. So as you know, the payment terms do not start until 12 months after the loan is underwritten when you sign the DocuSign contract. So you have no payment or principal interest due in the first 12 months. It kicks in after 12 months. It's payable accordingly thereafter on a monthly basis. It accrues at 3.75, which you all know, 30 years. Payment terms, very straightforward. All right, so let's get right to collateral. Remember, this is an $85,000 loan, so it is collateralized. But I think that these terms, and I am guessing, but I'm with a strong guess, that this is a universal contract that they use for all SBA loans for EIDL. That there's not actually two different contracts. For loan amounts of greater than $25,000, borrower hereby grants SBA a collateral, and I'm skipping through it to summarize it, of the following property that borrower now owns or shall acquire or create immediately upon the acquisition thereof: equipment, instruments, chattel, documents, letters of credit, deposits, commercial torts. So it's a lot. I mean, it's all your equipment, it's your bank accounts, it's your letters of credits, it's your deposit accounts, any tort claims you have. You're giving them that collateral if your loan is over $25,000. It's detailed right here on page 2, or the first section of the loan authorization agreement. For loan amounts of $25,000 or less, SBA is not taking security interest in any collateral. So this answers a question that a lot of you viewers have had. What is the $25,000? It's $25,000 or less is not collateralized. $25,001 is collateralized. Let's go to the next page. Requirements relative collateral. You cannot sell or transfer any collateral during the loan term, 30 years, without prior written consent of SBA. So you can't move around the collateral if it's a collateralized loan within the terms of the loan, unless you get written authorization from SBA. I don't know what they do with that. I don't know if they always grant it. I don't know if they don't grant authorization, but that's what you're getting yourself into. All right, use of the loan proceeds. Here we go. We're going in right at it right now. What are the terms and conditions on which you can use the EIDL loan money? Borrower will use all the proceeds of the loan solely as working capital to alleviate economic injury caused by the disaster occurring in the month of January 31st and continuing thereafter, and to pay filing fees and handling charges of $100, which would be deducted from the loan amount. So anything from working capital to alleviate economic injury. Now, I mean, I'm going to be very in-depth here and say, hey, the term working capital is not defined. It says working capital, but it's not a defined word of the contract. So we really don't know with any specificity what is included in working capital. Requirements for use of loan proceeds and receipts. Well, here's some more. So you got to pay attention to this. Borrower will obtain and itemize receipts and contracts for all loan funds spent and retain these receipts from 3 years from the date of final disbursement. Prior to subsequent disbursement and whenever requested by SBA, borrower will submit itemization with copies of receipts. So let's go over that again. We already know you can use it for working capital. You can use the EIDL loan for working capital, but what do you have to do with that? So you need to get itemized receipts of what you're using it for and keep those receipts from the date at which you disperse the funds 3 years out and prior to each and subsequent disbursements and whenever requested by SBA, borrower will submit to SBA such itemization with copies of receipts. You know, you have to take that for what it's worth. What type of authorization do you need? How do you get the authorization? Prior to any subsequent disbursements, if any, when requested by SBA, it's an and, it's not an or, which is interesting. You have to submit those copies, those receipts to SBA. So, I mean, let's be very literal with it. It says that you can use the EIDL funds for working capital, and when you use it for working capital with disbursements and when requested by SBA, you have to submit those itemizations to SBA. You don't have to keep the receipts after you spend the money after 3 years. So you spend the money in 2020, by 2024, you don't have to keep those receipts anymore for 2020. Borrower will not use directly or indirectly any portions of the proceeds to relocate without written permission of SBA. Can't use it for relocation. To request SBA's prior written permission to relocate, borrower will present to SBA the reasons of the relocation. So you can't use the money to get a U-Haul truck and move down the street to a new office. But it also says in the same breath, you can ask to use the funds by submitting a request to SBA and seeing if they grant it or not. Borrower will, to the extent feasibly, only purchase American-made equipment and products with the proceeds of this loan. I mean, that's very nice, but if it's not feasible, you don't have to. Borrower will make any request for a loan increase for additional related damages as soon as possible after the need for the loan is discovered. SBA will not consider requests for a loan increase received more than 2 years after the loan is approved. So here you go. I mean, a lot of you are asking this even this week in the live chat last night. When and where and how can you ask for an EIDL loan increase? Well, you can increase it before it's underwritten, before you sign the contract, but also you can request it within the first 2 years that you have the loan in existence. After that, you can't. Really, really fascinating stuff. We're only on page 3 of the agreement. Deadline for returning the loan closing documents. Borrower will sign and return the loan document to SBA within 2 months of the date of this loan. By notifying the borrower in writing, SBA may cancel the loan. Compensation for other sources. Eligibility of this loan is limited to disaster losses. We already know all this. All right, here we go. Page 4 of the agreement, page 4 of 11 of the first part of the agreement, which really has been a battleground of comments between viewers and myself. And here we go. Hazard insurance, that wonderful thing, hazard insurance. Now, remember, this is a person with an $85,000 loan. But there's all indications that this contract is a universal contract, unless you can tell me yours did not have this language in it. Within 12 months of date of this loan and authorization, the borrower will provide proof of an active hazard insurance policy, including fire, light, and extended coverage on all items used to secure this loan, at least 80% of the insurable value. Well, there you go. Some viewers were correct in their comments. So, if the loan is secured by items, you have to have hazard insurance. So, some viewers were 100% correct. You do not need to have hazard insurance if it's an uncollateralized loan. If it's a collateralized loan, then within 12 months of signing the agreement, you need to have hazard insurance. And you need to have it for 30 years. Borrower will not cancel such hazard insurance in the term of this loan. Books and records. You must keep your books and records 5 years until 3 years after date of maturity. Must provide them when requested. Let's go to the next page. Page 5. Limits on distribution of assets. Borrower will not, without the prior written consent of SBA, make any distribution of the borrower's assets or make any advances by way of a loan to any owner, partner, employees, or any company directly or incorrectly, or any other company. So this is interesting. Borrower cannot make distributions to any owner or any partner of the owner. So it basically says, if you read it that way, that you can't use the loan for collateral. I mean, you can't use the loan for payroll. So for personal payroll. Equal opportunity requirements. If the borrower has or intends to have employees, borrower will post SBA Form 722. Well, that has nothing to do with the spending of the money. And let's go over certification, see if there's anything in here. No claim or application for other compensation for disaster loans has been submitted from any other source. Neither borrower nor if the borrower is a business or any principal owns at least 50% of the borrower is more than 60 days delinquent on any terms of an administrator order, court order, or child support. We all know that. Disbursements of the loan. Let's jump to page 6. Disbursements will be made and by the discretion of the SBA counsel in accordance with this loan. Disbursements may be made in increments as needed. Other conditions may be imposed by SBA to general requirements of SBA. No disbursements may be made later than 6 months from the date of this loan authorization agreement unless SBA in sole discretion extends the disbursement period. For loans over $150,000, so certification of regarding lobbying. For loans over $150,000, Congress requires recipients to agree that the appropriate funds will not be used for lobbying. So another EIDL term is that if you have your loan over $150,000, you can't use it for lobbying. All contractors, subcontractors, contracts exceeding $100,000 are required to certify and disclose accordingly. Then there's a whole page about lobbying. Then we have a note, promise to pay a note. Here it says the loan amount, $85,000. Borrower's name. Then the security agreement. So this is where it's collateralized. So this again is an $85,000 loan. It's secure. It has a security agreement, and it says grant a security agreement on paragraph 2. For value received, the borrower grants the secured party a security interest in the property described below in paragraph 4. Paragraph 4, collateral description. The collateral in which the security interest is granted includes the following property the borrower now owns or shall acquire or immediately acquire as tangible. And it's basically what we talked about before: inventory, equipment, bank accounts, loans, restrictions on collateral transfer, same thing that we discussed before. It repeats the same language. We're on page 3. Default talks about that. So there's a separate page that is provided to loans over $25,000 that concerns the security. And there you have it. You have to sign and date that security agreement as well. That's why this agreement that this $85,000 loan went to was 19 pages in length. There was an additional 5-page security agreement, which is basically a collateral agreement. So there you go. We finally see what EIDL loans can be used for. What can you spend the money for EIDL loans? Is the collateral threshold $25,000 or $24,000? We now know the collateral threshold is actually $25,001. That's what collateral kicks in. And we now have the answer about hazard pay. That hazard pay is when the loan is $25,001 or more. A lot of great stuff finally answered. So there you go. That's the EIDL loan contract. You now know what you can use EIDL loan funds for, what you can't, when you need hazard pay, when the collateral starts, and can you pay yourself or your employees in a very windy day. Hope you are good. Stay with LALATE for more.